We're here today to launch our July bi-monthly report, focusing on trends and transactions in all sectors of the commercial property market in Northern Ireland. At the mid-year point, we had a very busy first half to the year, particularly in the investment sector of the market, with a large number of transactions, and over recent months an increase in demand and appetite from UK institutional buyers, mostly driven by the fact that the yields that are achievable in Northern Ireland are much more favourable than those attainable in UK regional cities at the moment. There's also been particularly strong demand for office and retail investment opportunities where there's rental growth prospects. According to our research, over £140 million was invested in the first half of the year, with more than 90 million of further transactions in legals at the moment, suggesting that the second half of the year is likely to be stronger than the first half in many respects. Recent transactions have included the sale of Earnside Shopping Centre in Enniskillen to new entrant Tristan Capital Partners, along with shopping centre specialist Alandi, for more than £34 million. Prime office rents have continued to rise in Northern Ireland, with Belfast rents now in the order of £15.50 per square foot. These rents have been escalating over recent times in reaction to a shortage of Grade A stock in the city. Transactional activity on the occupied side has been somewhat slow in the first half, but there are a number of transactions in legals at the moment which should boost take-up in the second half of the year. There's also a number of new requirements over recent weeks, including a 15,000 square foot requirement from Puppet Labs, and also a requirement for Regis for up to 20 serviced office centres across Northern Ireland. An announcement by Invest Northern Ireland that they will support developers in terms of providing Grade A accommodation in Belfast has been particularly welcome. However, it has been disappointing to hear officially from Stormont that they may not now be in a position to introduce a reduced rate of corporate tax in Northern Ireland in 2017, as had been anticipated. We continue to see new entrants to the retail sector. In fact, Skechers are currently fitting out a new store on Donegal Place and are due to open a new shopping location in Rushmere Shopping Centre later this summer. There's also very strong demand in the restaurant and the food and beverage sector, with several new entrants to the Belfast market over recent times. The tourist sector across Northern Ireland continues to perform particularly well. The recent hosting of the Irish Open at Royal County Down and the hosting of the Tall Ships Festival in Belfast have been particularly beneficial for the region and have been particularly helpful for the hotel sector. A number of hotels have been traded in recent times, and there are a number on the market at the moment. And we also continue to see some new hotels being planned, not least the one being planned by Hastings Hotel in the Windsor House office building, which sold in recent weeks. Much of the focus for Northern Ireland property sector during July and August will be on finishing out the deals that were agreed in the first half of the year, and also in terms of preparing assets for sale that will be launched during the traditional busy autumn selling season.